On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. AlexOCrypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. AlexOCrypto. 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 What you know about juice? Making the moves that'll blow casual, breaking the news. Revenue proof, a building portfolios taking well over exceptional gain. I'm trapping this game, so participation ain't a hard knock. I put in the work so you got knowledge. You ain't drawing with luck when you following us. The result is a pen full of fat pockets. Bada bang, that's an outer game with an auto flame. With a lot of hate, get about the lane, ain't about the trade. Have another trade, get another play. They playing God so pretentious. Drapes in these waters forbidden. Well indeed, that's a felony. Don't look at me for the TRB. Have you heard of TRB? I don't know. On the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. AlexOCrypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. AlexOCrypto, on the come up, better sit low. The product base, but it drip though. Pocket fat when the chips low. AlexOCrypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. AlexOCrypto. 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 AlexOCrypto.
Yo, Solana gang, man, this is crazy. Gang, let's go, baby. We pumping. Sorry, I'm excited. Are you excited? I'm excited. I'm long, up $500. Another trade, another day. What's going on, you beautiful, gorgeous, sexy, hairy, fuzzy, floating mammals of the ocean? Otter gang, let's go, baby. Are we pumping or dumping or humping and thumping? And I'm in my attire. You want to see what the shirt says? I want to see a 1 in the chat. You want to see what the shirt? I'm wearing dad shirts now. What does the shirt say? Any guesses? Any guesses? Any guesses? All right. I eat pieces of shit like you for breakfast, baby. Shooter McGavin. Gang. Let's go, baby. Come on, baby. Solana lana lung. Given in the Discord, I added to the trade. I'm up $450 right now, looking for continuation. FOMC in the place to be. What's going on? Otter gang. We clipping. Who cares, man? We always clipping. We excited, man. It's the afternoon. We can be extra loud today. I'm gonna break your speakers. Wait, you eat pieces of shit for breakfast? Just now, looking at the charts. I mean, we said to long down here in the Discord live. It was just you needed to wait. That's it. You needed to wait. We also said in the Discord live that we needed to break, guys, big juicy line. Okay? We needed to break the line. Check. Right? Holding support. Break line. Happy days. Happy Gilmore days. Look, I'm even drinking water. Look, no coffee, guys. This is not vodka. This is not vodka. This is FOMC water day. I think my wife's bringing me a $4. That's what my family calls Starbucks. Hey, how do you know you're at a gay picnic? Go on, Golden God. Tell me. How do you know you're at a gay picnic? Tell me. Canadian tuxedos in full sweat, man. We got the vodka going. Do you got to give it the swirl, guys, or what? I don't know. I'm going to get it on the keyboard. The hot dogs taste like poo-poo. Golden God, what's the hardest thing about rollerblading? Telling your parents you're gay. And we're off to a great start, everybody. Welcome to the AlexOCrypto Show, FOMC, Chair Powell. My God. I mean, you got to be able to. Let's go, baby. HRJ's in the chat. You guys are all coming through, man. You guys are wild, man. Shouldn't you go watch Tom Crown or something like that? You don't want to be part of this afternoon AlexOCrypto madness, man. This is madness. Did you see the stock market today? 165 trillion knocked out on that dump. Trillion. 165 trillion. 1.65. Sorry, 1.65 trillion. The only thing green is McDonald's. Wild. Good times, man. Chair Powell going to come out hawkish or dovish today? What are we going to get? Looking for Solana to continue here, guys? We'll see. We'll see. We'll see. I'm going to exit this here. We'll look to re-enter, guys. I'm going to exit here. Quick $500 to start the stream. Okay, I'd like to see some likes, some subscribes, some GGs in the chat, please. That would be very, very good. Very, very good. My English is on fire today, guys. All right. On fire. On fire. Get stopped out here. Economic calendar ready to go. There's the stop out. All right. We got a interest rate decision. We're getting a cut, guys. Let's face it. So we're going to get the cut. Here's the flashbang. Here's your 97.8%. All right. It's what he says. If Mr. Pow Pow is kicking the can down the bloody road, okay? If he's saying, oh, well, we don't have data, we don't have this, or we gotta wait, we don't, blah, blah, blah. You know, not excited, man, not excited. All right? Not exciting. All right? Take your profits, pay yourselves. Welcome to the AlexOCrypto Show. Taking trades, showing you the trades, having fun, kicking names and whatever, right? Show me yours. I'll show you my last 5 trades, 4 trades, whatever you want to see. This is how it's meant to be. I've just been scalping Solana, guys. It's just been little ups and downs all around. Scalping. Look at that $1 loss. Oh, yeah, baby. We love a good risk management strategy, don't we? All right. Keeping it simple. Up, down, all around, okay? Showing you guys the trades, taking the trades, having fun, kicking ass, taking names. Waiting for Chair Powell to open his mouth today. So welcome to the FOMC. You can watch Jason Gasper. You can watch Tom Crown. We could even watch Tom
meeting.
Crown.
I think that's a little ahead. I have a feeling that the Fed and their slow data-driven approach is going to be announcing the end of it and then in the future announcing quantitative easing. But either way, ending quantitative tightening is effectively the same as starting quantitative easing. They're going to cease to remove liquidity from the system, and they're going to have a plan setting forward to inject it.
To be honest,
this is a very dovish, extremely dovish. As usual, we're going to watch Chair Powell. We're going to look for all of our favorite signs and signals. The words he uses, the language he uses. I don't know what color tie he's wearing, what the reporters ask. It's going to be a hell of a stream.
It's the OG, man.
I'm excited for this one. Hopefully you guys are too. And by the way,
James,
good morning to everyone who is not suing me.
Is a bitch.
If you're not suing me, I hope you have a good morning. If you are suing me, I hope you have a bad morning. I just
message not sent. What?
Audacity. The audacity of it.
I can't put that.
My recording program. I gotta get rid of these buttons on my toolbar. I got off on a tangent here. Yeah, it was a good tangent.
Love Tom Crown, man. I gotta maybe send it. You see that? That guy's wanting to sue him. Crazy, man. Anyways, thank you, Tom. There we go. Now it's sending. I just had to keep it off. Okay. I guess I couldn't spend that much. I said James wins a bitch. I love you, Tom. There we go. I'm getting a Telegram message. I get like messages from like random chicks on Telegram. Does anybody else get that on your Telegram? You get messages from random women and you know it's a dude, a big fat hairy slimy scam dude, but his profile picture is a woman. You know what I mean? Does anybody else get these random messages? My wife's like, who the f is that? I'm like, it's a big fat hairy greaseball man who's trying to scam me. Hey, how's it going? You know? And you know it's a big fat geezer.
Of our own. Right here, right now. While we have 9 minutes until this rate decision is in, I'm going to gift out some free memberships to our channel because I feel like it. If you would like one, I'm certain somebody. If you are, my closet, squeaky. Got nothing. We'll see. He's not suing, says Nimoy. Well, he told our own.
Gotta love Tom, man.
Not
always
on
respect.
Par.
Always respect the man who starts the trend. You know.
Announcing live stream. They are giving out at random.
Are we gonna do a giveaway today?
Things.
We can do a giveaway
You're having
today.
a good time. I'll give you guys like 60 seconds and I'll give these out. Let's go. Also, put a Chair Powell in chat.
Chair Powell.
Now, I can't verify nor deny.
Now, I know I will take more trades
verify
than Tom,
nor deny
Tom Crown.
that YouTube will.
We love Tom, but
we're
here
to
to
say
trade,
Chair Powell. I don't know. Could be. Anything could happen.
What's going on, Mel? Good to see you.
Chair Powell. What's up, boys? Tom will become popular if he gets sued. Well, I feel like it. I feel like you're probably not wrong. It'll be a good story arc. A Chair Powell, boys. A Chair Powell.
All right.
A Chair Powell. Interest rate decisions coming in just a few minutes. We're getting some Chair Powells in. I'm going to gift away these memberships. First 5 are going out. We'll do more.
Gotta love Tommy. All right. Retest coming back in here. Beautiful, beautiful move here. Thank you, everybody, for being on the live stream with me. You could be anywhere, like especially with Tom Crown. You can go over to Tom Crown. I really don't mind if you go over there. He's the man, the myth, the legend who does this, right? At the end of the day, we're here to pay respect, and we're here to, just simply make money, not financial advice. That's what we're here to do. So we're gonna watch Bitcoin. We're gonna watch the S&P. We're gonna watch the SPY. We're going to open up the Trifecta chart, guys. So we're going to go over here. We're going to go and split it into tree. We're going to go into trees, okay? And we're going to add. That's 2. What's going on? My wife's here, and she brought me a beautiful Starbucks coffee. You what? The queue was out the door. The queue. She's so British. The queue was at the door. Yeah. Well, you know what that means, my beautiful wife. I didn't make a coffee before the stream. Hey, buddy. No going on camera, please. No going on camera, please. We don't want you, we don't want weird internet people taking pictures of my child. Thank you. Okay. My son's home. Okay, 7 minutes till we get the news. Oh, we got to set up the trifecta chart, guys. That's what it's all about. Okay, we got the S&P 500, guys. Haven't filled the gap on the S&P. All right. We got the Nasdaqian, okay? Haven't filled the Nasdaqian either. Look at this up only Scheisenhausen. Okay, we're going to go 12 minute on each one of these. Okay, 12 minute. Let's go 5 minute. 5 minutes a little bit more juicy. Okay, we're consolidating sideways here, guys. So we're looking for are we going to go Bitcoin as well? We'll go Bitcoin as well. So the trick of the trade, guys. We love trading this. We've made lots of money trading this. We've taken losses. We've taken, regular risk management. You got to be quick. All right? This is like 2 pump chump price action, guys. You cannot risk it for the biscuit here, okay? It is key. You cannot, I repeat, you cannot risk it for the biscuit here. You should use half a position size. You should not be using over leveraging, over whatever, right? We have a very nice pump into this. 5 minutes till the data comes out. We are expecting a cut, okay? We have a full retracement in here. Who would have thought? Golden pocket. All right, golden pocket resistance 786 sell wall. Okay, retesting previous lows. Not out of the woods yet. We've broken structure here on a shorter term time frame. Looking for continuation. A nice push up. You could have got in long here. You didn't. That's fine. We'll find more. Okay, thank you everybody for being here. We are excited just as you should be excited as well. Okay, this is a random stream, man. This is a random stream, and we're very grateful. Make sure you guys are saying good morning, smacking up the like button, subscribing if you're new. We're looking to make some money here, everybody. Thank you for supporting the channel and hanging out. Could someone send me the link for the what? For the premium Discord. Yeah, just come over. It's in the description down below. You can come over, join the Discord, watch the video, all that good stuff. Best Discord in all of crypto, man. What's going on, Bearded Mac Mike? What's going on, man? Ancient Swine, Trace, Crypto Rob, Wody. What's going on, Albert, Massey? Menace TV, what's going on? Just a sub offshore miner, Vegas Claw, V Monitor, all you amazing people. Zenbo, what's going on? Good to see you, Mike Whitty. Vegas Claw, V Monitor, Golden God, Alfa Romeo, Fettuccini. What's going on, my man? How you doing, Wonderbar, Jake Dorton? Thank you for the kind words yesterday, Jake. Let's go, baby. Let's go, Golden God. How you know? Oh, we answered that. I love your bollocks. I like flat earther stuff. I think the earth is round, but I can get down for some flat earth stuff. Ancient astronaut theorist. That guy's the coolest man around, man. Ancient astronaut theorist. You cannot beat it. Great hair. Great conspiracies. The Anunnaki. I can get with the Anunnaki. Those guys are my homies, man. Those guys with they're holding the bag and the pine cone. The pine cone and the bag. Anunnaki. Those guys, don't even get me started. I will find a bag. I already have a pine cone. Okay? Put a 1 in the chat if you know what I mean. You are my people. You are my people, man. Let's go, Charles E. Chris Reeds. Good morning, Dave Digital. My brother, what's going on, Bull Runner? Andrew Cameron. Beautiful, beautiful child. Nova's beautiful. God bless you, man. Zald. Good to see you, Vegas Claw, man. I'm actually really woke. Yeah, man. Ancient astronaut theorist, man. Don't forget my pronouns are Lord Otter and King Beaver. Please. Please use my pronouns. Nice push here coming into the data. Melissa, I love you. Even though the Dodgers are going to lose. Joking Goat Giggles, good to see you. Chris Reitz. Wild Wild West, let's go, baby. No woke, I mean wake. Well, Alex is real wake. I'm real wake. Woke has been ruined. Awake. Yeah, man. I mean, it's 12 o'clock noon now. Guys, don't forget, when I live stream, it's 4 in the morning. Like, it's 5 in the morning. It's early. It's early. I get up early for you guys because, I just love you guys so much. Here comes the data. We got 1 minute and 20 seconds, and then we're going to stream Chirper. Good times, man. Thank you, everybody, for supporting the channel and hanging out here, guys. Let's go. Walked the world with Enoch. Let's go, man. You guys are great, man. Oh, man. All right, pushing up here, consolidation. Here comes the data, whatever you want to call me. Pushing up here. Here we go. A little liquidity this morning, sweeping everybody out. Fed interest rate decision in 40 seconds. Are we going to watch the triple charts or are we going to watch Bitcoin? Bitcoin's pushing up here, no trade. Looking for a slap down. We want to see a slap down. Sui, alert going off. That's going to get really annoying really fast. All right, coming in here. We got 30 seconds. I can get rid of the alert on Sui, guys. We gave Sui trade set up in the Discord. Join the Discord. It's the best Discord in all of crypto. All right, get rid of that in 30 seconds. I do not want to hear the alarms. There's going to be more alarms, guys. I'm prepared for that. Solana here looking to push. NASDAQ, S&P, Bitcoin. We'll see. We're prepared. Everybody prepare. Prepare. Get your underpants ready. Here we go. And we're getting a rate cut. Whoop-de-doo-da-day. Okay. Choppy, choppy. Bitcoin choppy. Bitcoin choppy. All right. It's really about what he says, right? Okay, dumpy. Dumpy, dumpy. Coming down. Dumpy, dumpy. Dumpy, dumpy, pumpy. Dumpy, pumpy. Dumpy. Dumpy, pumpy. We're looking for dumpy, pumpy. Dumpy, pumpy. Dumpy, pumpy on Solana. Can we come down here? All right. Dumpy. Humpty Dumpty. 0.25 basis point cut, guys. Nothing burger. Okay? We have cut. Everybody, we have cut. The cut is real. All right. Looks like we're getting a push after that. No push. What is the market saying? Push, push, push. Continuation. We went down first, guys. Be aware. Down first. Down first. Bitcoin could come down lower. Be aware. No trade yet. No trade yet. Still waiting here. Dumpy pumpy. Looking for dumpy pumpy. No dumpy pumpy yet. Where's VWAP? Dumpy pumpy. It's more about what he says today. We all know. Okay, dumpy here. Humpty Dumpty. Okay. Dump on NASDAQ, dump on SPY. So rate cut is in. Congratulations, we got a rate cut. Cheaper money, cheaper borrowing, which is good. Cheaper real estate. I like this here. Can we push? Can we push? No trade yet, still waiting. Double top on Solana, golden pocket, no trade. Ooh, Bitcoin's pushing. Okay. Looking at possibly long Solana. Bitcoin's pushing. Possibly long Solana here. Nice on. Yeah, I like this. Solana looks good. 1 minute. Push here, Solana. I'm long. I'm long on Solana. Push, you nambe pambe. Push. Push. My beautiful wife is bringing me a coffee because she is an amazing woman. Thank you, sweetheart. Push. Don't sweetheart me, she says. All right, push. Nice push. Alert. Beautiful, beautiful. Keep going. Don't be a todger, man. I was up $500. Come on. I was up $500. Now I'm not. Now I'm in the red. Now we're dumping. Oh no. Oh no. Push. 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 Come on. Bitcoin looks good. Coming back. Coming back. I'm going to get out break even here, I think. Yeah, let's get out break even. Looking for follow through. I was up $500 at one point. Very volatile, man. Push Bitcoin. Can we get follow through here, please? It literally just missed my take profit. Like, pretty upsetting, actually. Oh, man. Can we get follow through? No follow through here on Bitcoin. Rotating down here. No trade now. Out of the trade. We're good here. I look like I'm larger than life here. It's some Backstreet Boys stuff here. I was up 500. Now let's pull up the stream with Jerome Powell. Okay, so we got our cut. No trade now. Break even trade. I'm looking for a push here, really, but Steve Ruggles, man. Steve Ruggles for real. Chopping. Bitcoin's got to go here. All right, let's see what we can find here for the stream. Thank you, everybody, for being here, supporting the channel. Looking for that push, man. This thing looks good. Breakout, retest, continuation trade here. Failure to do so. Really. Failure to do so. I'd like to get up to VWAP here on Bitcoin. Might have to come lower, like I said. Might have to come lower. All right, still waiting here. You got to be quick here. Come on, Betty, push. You nambe pambe, Madonna bello. We want to see lower here. Solana coming back, testing support. Nice dump here on Solana. Okay. Can we bounce here? Coming right back for all those late longs. Can we bounce here? No bounce. Bitcoin bounce. Yep. Bitcoin came lower. Okay. This is wild, guys. Welcome to the Wild Wild West. I'm going to go and look for the stream here. Ooh, Solana's bouncing nice. Push Solana. Push Solana. Anybody get long on that Bitcoin bounce? That looks nice. Reckon the bulls, reckon the bears. Today's the day for it, right? Today is the day for it. Considering going long again. This looks strong. Solana possibly here. Solana holds this support level. We could rotate back up to the highs here. Something like that. No trade yet. Still waiting. Push Solana. Anybody in a trade, put a 1 in the chat if you're long. Put a 2 in the chat if you're short. Volume's pretty low considering FOMC. We could turn that up there if you want. We could turn it up here. Yahoo Finance. FOMC, right? I'm considering a long on Solana. Not yet, though. I want to see this candle close here. I want to see strength. Go. I want to see strength. Push. Push you, Nambe Pambe. Bitcoin. Pushing. All right. Long on Solana. Let's go. Let's go, baby. Push you, Nambe Pambe. Push. I hammered this one, guys. Looking to get up here. Push. Push. Stop loss to entry soon. Guarantee some profits. All right. Guaranteed profits. Looking for $2,000 here. Can we get up? Push it, you Nambe Pambe. All right. Stopped out for $800. I'm okay with that. Woo-wee. It's exciting, man. This is exciting. Quick 800, guys. Quick 800. All right. Jeez, this is crazy, guys. I don't know what to say. GG's in the chat. You buy the momentum, you take the profits, and you run away. This is not for the faint-hearted, okay? This is not for... This is wild. Hey, man, you can still be a great trader. It's just like, this is degenerate, okay? This is not what we teach in the Discord, everybody. This is not what we teach in the Discord. Be very aware of this shit. This is a little bit of fun, man, okay? You're rolling the dice. You're rolling the dice. You're taking a shot, man. Guys, we're not here to change lives on this stream. We're here to have a little bit of fun, okay? Oh, man. My wife is an absolute legend. Sweetheart, thank you. She's going to tell me to fuck off. She hates being called sweetheart. All right. Another one. Okay, another one. Looking for more volatility. More volatility. This is great, guys. Thank you for being here. What is the NASDAQ doing? Okay, flat. We got Darth Maul candles on Bitcoin. We got Darth Maul on the NASDAQ. We got Darth Maul on the SPY. So it really comes down to what comes out of this guy's mouth, literally. And it's, you never expect someone to have that much power. But we're here. We're live. We're well dressed today, guys. Look at this. You got the Deadpool hat. Maybe we should do the Deadpool like this, guys. You got the Deadpool hat. Okay. I'm chilling now. No trading now. We're going to chill. TRB. Should we trade TRB? No way. No, not a Scooby. Double top here, rolling over, coming back down on Solana. Bitcoin looking for a pink box, baby. That's what we're looking for. Come on to the pink box. Rolling over, a little bit of hopium, dumpium. In my opinion, they should be using today to dump the market. And then we rally later. That's the hope. That's the hope. Okay? Where's the stream? He's not talking yet. He's not talking yet. Get the stream on. He's not talking yet. He's talking in half an hour. Are you watching one of the fake ones? You got to be watching one of the fake ones, man. He's on it. He's on in 20 minutes. Don't panic mode me like that, crypto dog. Oh, sorry, news. Federal Reserve to NQT on December 1st. Cool, man. Merry Christmas. That's awesome. No,
Your paid workers getting hired in different industries, maybe not Finance specifically here. Tech, except for at the very top end of the range there.
They do an okay job. No? Yahoo Finance, is that okay with everybody? I think they'll have Chair Powell in here. You got me all puckered all of a sudden, crypto dog. You got me real puckered. Yahoo Finance, okay? Oh, that's a good coffee. My wife is the absolute Scheisenhausen, man. Theater mode. All right, we're going to go theater mode. We're going to crimp this thing down because we don't really want to. We just got to have it big enough so I can twist Jerome Powell's nipples. That's it. All right, that's it. We just got to get it right above my head here, within reach. I can extend my hand up. This is for Django. And we're prepared. I do not want to listen to these wankers talk, though, right now. What is the pink box? Well, we all know how much a pink box can either make you lots of money or lose you a lot of money. In our case, in our Discord, the pink box is actually the only pink box that pays you instead of costing you money. If you know, you know. Where's the kitty litter box? We don't have one on the chart, but the pink box is just the pink box, man. once you know, you cannot. I would say the kitty litter is like a VWAP slap in here. Okay, that would be kitty litter. There's the litter box. It's yellow and brown for a reason. Okay. Solana rolling over right now. No trade. NASDAQ rolling over here as well. Okay. It's been a down day for the SPY, which is great. This is good. Look at all these gaps, okay, need to be filled. Okay. We'll see what he says today. Thank you, everybody, for being on the live. Who would have thought that you could make money off of a pink box, guys? Normally you have to pay for the pink box, okay? Was asking for the confluences. So in the pink box, we have a golden pocket retracement. We have a liquidity zone. Okay. We can go over it here before Chair Powell talks. Okay, so what do we have for a pink box, right? This is always important. Well, if we're looking here, we go swing low to swing high. We can see that there is a fib level here. Okay, at our 110 level. We also have liquidity at the lows in here that I'm interested in, so we could come down lower than the pink box down here. Okay. We also have volume in this range in here. Last little nugget before we drop down. Okay, so that's our last little before, you know, we could be in trouble. We're trying to hold here, obviously, right? But it's our last little nugget. And that would be a full retracement. That would be juicy, in my opinion. So we are definitely looking here. We could go full range, right? We could go from the big low down here all the way to the high, and we could be looking at 108. I don't think we're there yet, right? This is beautiful liquidity in here, but you know, 1, 2, 3, 4, 5, maybe, and go. We'll see. We'll see. Patience. Patience. Thank you, everybody, for being on the live and hanging out with me today. Good times, man. Thank you for supporting the channel, hitting the like button. FOMC day is always a good day. We've taken 2 trades, 1 break even, 1 $800 trade so far. So happy days, everybody. Continue to manage risk, and hopefully help you guys navigate these beautiful charts. Thank you for supporting the channel and hanging out here. Subscribe if you are new. We're live every morning, 8 a.m. till 10 a.m. Trading live, showing you guys the trades, taking the trades, setting up the trades, having fun with the trades, and talking a lot of smack. Maybe talking about pineapples on pizza or your favorite truck. Who knows? It could be hockey talk. It could be tool talk. So I used to be a carpenter. Happy days, man. A little 1-minute stiletto pattern here. What's going on, Piper? Good to see you, bro. How you doing? QT ends in December, yeah. 1 minute stiletto on Sol, 1 minute stiletto on Bitcoin, no rate cut. Yeah, we got a rate cut, 0.25. We've already taken 2 trades today, Piper. Look at that. Kicking names and taking ass. All right. Bounce, baby. You guys long here? This is nice. Nice little stiletto here on the 1 minute. Trying to push. Bitcoin, trying to go. Trying to go on Biddy here. You guys are incredible. Thank you for being here, hanging out. Another day. Looking to get back up to that orb, guys. That's where we're looking to return to, is the orb, the VWAP. I guess we'll leave the litter box on the on the chart. You guys are brutal. Litter box. Litter box, man. Long on ETH, nice. ETH has been quite like miserable lately. Oh, look at that. We had 2 levels. Hit target 1, yes, check. This morning, hit target 2, check. Look at that, guys. Check, check. It's like we should be from Czechia. Don't they call Czechoslovakia Czechia now? Czechia. That always confused me, man. I mean, are you Czechia or are you Czechoslovakia? What are you? I don't know. Do you both compete in the Olympics? Individually now? I can't keep up, man. Anyways. Okay, nice push here. SPY's bouncing. NASDAQ bouncing. Okay, nice bounce. Holding the low here. Very nice. Holding these lows and the highs. Nice bounce. Looking bullish. Coming into Chair Powell. Okay. What is your thoughts here, Piper? Are you bullish? Are you bearish? Are you where? Check here. Hello, what's going on, Tomas? Is it Tomas? I bet you I nailed that. It's not Thomas, it's Tomas. Put a 1, Tomas, if I said that correctly. Ethereum, yeah. They're still tripping out about Pam. Yeah, it's woke GPT. Oh, I nailed it. Thank you. God bless you, bro. Hopefully you're having a wonderful day, man. Thank you for being here. Coming into Jay Powell. Well, you know, who's your daddy and what does he do? We gotta have Piper on the show here one day, man. Piper, are you going live today on the chart hackers or what, man? Or are you just gonna come and hang out with me? I think you should just come hang out with me, man. I'm way more fun. I'm gonna get you degenerate scalping, man. I was gonna say I was gonna rub off on you, but you'd like that too much. Oh man. Bullish engulfing candle here. Nice push. Biddy's looking dismal right now. So it's all about what this guy says here. We are looking lower and slower. Okay. I don't know. I'd like, what? Huh? Is that whiskey in that cup? No, we just straight up coffee. My wife made this, man. I don't drink. Dave Digital, you want to join the rubbing circle? Soggy biscuit, man. That's not cool. Guys, this is witching hour. Like, anything after 12 o'clock for me is complete witching hour, man. Like, I put on such a good filter for you guys. I'm kidding. I don't have a filter. Come on. I'm the only YouTuber who doesn't give a shit. There's some others. There are some others, but like, I'm gonna owe so much money on the swear jar for the Discord today. They love it when I get frisky on the live streams because they all get paid, right? We definitely swear at least twice. They all get paid. I get poorer, but that's fine. They deserve it. They're cool, man. Keep swearing, they say. Okay, so we got Chair Powell coming. What are they
less
talking
levers
about?
to pull and less maneuverability around such
the first thing he says is pulling levers, guys.
Change in labor costs. So I think that
what the hell, man? This is like a financial porno.
The companies or the ultimate consumer, our daily tariff collections up through yesterday are the highest that they've
Everybody
been
tells me to trade NASDAQ,
through that day of the month since the implementation of tariffs. So we know that those dollars are being paid, and it's a fairly significant tax increase and causing challenges for a lot of these firms. I don't think that it's really playing through to inflation all that much because the consumers are not really in a place to shoulder those kind of price increases. They're just sort of taking it away on the.
I can't listen to that. We got 8 minutes till the hardest one to listen to comes on, guys. Thank you for being here. How many people are here, man? You guys are cool. 300 people in here. Not as good as our morning streams, guys. It's because you guys haven't liked the video, man. Only 96 likes. I think you guys can do a little bit better. Thank you for being here. Looking to hold this support push up here on Solana. Money coming in. Trigger wave on Bitcoin. This looks okay. Looks like it could push. A little bit of resistance in front of us. NASDAQ rolling over yet again. So SFP roll over. Concerning. That looks bearish. So look at that. Rolling over. Okay. Same deal here on Solana. Bitcoin rolling over. Money's coming in after that move. You can see that. You can see this move happening right here to get long. So we said in the Discord, break this line, get long, right? Look at the money coming in. Okay, very simple. Price is flat. Money's coming in. Anchor, trigger wave, money coming in. Long. Magical money printing machine. If you know how to read it, you can make money. What do we have right now? Well, VWAP rejection, rolling over, momentum to the downside, continuation of downwards trend. Concerning. What do we need to see? I would say liquidity grab and possible bounce. Okay, maybe pink box. We'll see. Currently trying to hold this support level though. We'll see how that works out. Solana's been trading a lot better, in my opinion, than Bitcoin or Ethereum. ETH looks good here. ETH is holding strong momentum to the upside here on this push here. So this is half decent in my opinion, but got a little Adam and Eve pattern here. Nothing to write home about. Jerome Powell in 6 minutes. Thank you guys for smacking up that like button. I appreciate you guys. What's going on, Paul? Good to see you, man. I think you're doing fine with Biddy. Yeah. Yeah, I do enjoy trading Biddy, man. I try to make $1,000 a day on Biddy. I've been doing better than that. Yesterday I lost $5,000, but I'm honest about it. Last week on the weekend I made $17,000. Okay, we won't even talk about the weekend. Okay, but there's good days, there's bad days, hard days, sad days, whatever you're into, man. It's just, are you managing your risk? Are you taking high probability trade setups? Do you understand key levels, structure, volume? I teach you all this stuff in the Discord, okay? Ask the Discord. That's all I have to say. I am not a salesman. Have you heard me talk about an exchange once? F no. The only time I suggest an exchange is for the community members, because then I can go and talk to my reps to help them. Do I have any banners here? Am I just going to, let's go. Let's do it. Let's do it. Let's just become a fun boy here. I don't need your exchange money. I'm not going to complain if you do sign up with my stuff. Right? But am I the guy here like this? Like, I look like a NASCAR driver. Judging by the price action today that we can... Oh, we're pumping here, guys. We're pumping here. In between the MexC and the Bitunix links in the description down below. All right? In between here. All right? If we hold Bitunix, we could possibly pump, guys. We're looking to rotate to the top of the C on MexC. Okay? And as long as Jerome Powell subscribes to the channel... And guys, make sure when you use my link, you definitely are using NordVPN, okay, as a support and resistance line here. Okay. Fucking hell. Wankers. Anyways. Oh yeah, and you can use the QR code. That's to my only toes. Go to my only toes on the QR code. QR code my only toes. I actually have a funny looking toe, man. I cut it off with a lawnmower as a kid. Making crypto honest again, baby. Let's go. Oh. Thank you for liking and subscribing. Join the Discord. I mean, there's value in the Discord, okay? At the end of the day, there's value in the Discord. Guys, if you don't know about my toe, as a kid, I was 20 years old. I was a junior carpenter, right? And there's me. Okay. And I got the lawnmower here, guys. Okay. Here's the lawnmower. Look at this, man. I'm an arts and crafts diva lately, guys. All right. I'm cutting the grass. Look, one motion, guys. So I'm cutting the grass. The bi-level's the grass, okay? I'm cutting the grass. Okay? And there's a tree here. We got a tree. Okay? And then there's a little hill here. And it's in the morning. And I'm cutting the grass, going around the tree, and I'm walking backwards. I slip on the grass, and my foot, I slip on the grass and I fall this way. My foot goes underneath the lawnmower and I cut my big toe off. Not even lying. The best part about it is there's someone jogging by and they gave me a cigarette.
We'll just price it in before you even get in the job.
Jim, I always like your take on this. We're waiting for the presser. We're waiting for Powell to step up there. Reporters are gonna ask a lot of questions, Jim. Let's say I make you a reporter, Jim. You're now a business journalist. You have the chance to ask Powell a question or two. What would be top of mind for you?
I think the questions here might be about the balance sheet.
Why isn't
they're
he
stopping the run?
Why isn't my son's crying.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated.
Put a one in the chat. Sounds good.
Balance of risks to employment and inflation. Today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
I think you traumatized my son with that toe story.
Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year.
If he's talking about GDP, that's bullish.
Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending.
Someone's phone's going off.
Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends.
SPY pushing.
In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline.
Bitcoin looks weak.
In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year, as inflation for goods
take a little stab on Solana long.
In contrast, Disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures.
Stop loss to entry?
Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting,
200
the committee
realized?
decided to lower the
GG's,
target
everybody.
range for the federal funds rate by a quarter percentage point to 3 3/4 to 4%.
Quick one. So you can get up to this.
Higher tariffs are pushing
here,
up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived.
GG's in the chat,
everybody. A one-time
everybody.
shift in the price level. But it is also possible that the inflationary effects could instead be more persistent. And that is a risk to be assessed and managed.
Who else is taking these trades,
Our
guys?
obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem.
It's coming back for me. It's coming back for me.
In the near term,
took my
risks to inflation are tilted to the upside and risks to employment to the downside.
Okay, $200, guys.
A challenging situation.
$200.
There is no risk-free path for policy
as
we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate.
That's why you take profits.
With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
Oh, yeah. Sweep of the lows?
With today's decision, we remain well positioned to respond in a timely way.
Sweep of the lows, keep coming.
Economic developments.
Keep dumping.
Keep dumping. We will continue to determine the appropriate stance of monetary policy based on the incoming data,
Solana.
the evolving outlook,
Dump it, Bitcoin. Pink
and the
box.
balance of risks.
Pink box.
We continue to face two-sided risks.
Pink box bounce.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December.
Box bounce.
A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Shut up, Link.
At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Long on Solana again?
Our long-stated plan has been to stop balance sheet runoff
when
reserves entry are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard.
Bounce, man.
In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet.
Not yet. Still waiting.
The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans.
Long on Solana?
We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Go, baby.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
No bounce? Come on, Solana, go, man.
Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed
damn, that's nasty, man. Solana dying.
At your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So,
Damn.
I would say that needs to be taken
I was up 700.
forward. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously.
Damn, dumping, man.
When we have
no touchy.
Between our two
no
goals,
touchy, dumping. Who's short?
Strong views
Who's
across
short?
the committee. And as I mentioned,
you are smart if you are short.
There were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And
talk about liquidity grab, man. Holy smokes.
How that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month, and maybe
no
today,
trade.
I won't put words in your mouth. There's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and waited to gather more information?
So the way I've been thinking about it is the risks
Big
to
bounce
the
on
two
Biddy.
goals
Pink
for a
box
very
didn't
long
hold.
time. The risk was clearly of higher inflation, and then that has changed now. And as we saw particularly after we saw the July meeting, we saw the downward revisions of job creation. We saw a very different picture of the labor market.
Everybody,
if you did
get short.
Higher downside risks to the labor market.
Tried to long it a couple times, man.
And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be
taking the opportunity to dump the market,
so in that sense,
right?
It was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire Jones,
Mr. Trump's not going to be happy with them.
Thank you for taking this question.
Big sell-off.
We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation.
Zero.
So you have
zero.
Some
Everybody.
People have different forecasts, right? So they'll forecast faster or slower progress on one or the other, and they also have different levels of risk aversion. And some will be more averse to inflation overruns, and some will be more averse to underruns of employment.
Trying to go.
And so you put that together. And as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, there are very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about this.
Nice bounce here,
December.
trying to bounce.
I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here. Is that it's not to be seen as a foregone conclusion. In fact, far from it.
There's my toe.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking
nice pushback here.
The place we're trying to reach.
Big
what we said
liquidity grab here,
for a
everybody.
long time now is that
this is a nice pushback, though.
Feel like we're
nice
a bit above.
See if it can continue here.
A level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened some things have been happening for some time now.
Long, short, anybody?
Gradual tightening
Still short?
in market conditions. Really, in the last, call it 3 weeks or so, you've seen
So
more
long?
significant tightening, and I think a clear assessment that we're
Nice
at
short.
that place. The other thing
Lasers.
is,
Killing it.
you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars because, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be
No trade
freezing
yet.
the size
Still
of
waiting.
the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby.
NASDAQ shows no signs of bouncing.
Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
There's
but
no
if this
comfort
shutdown
in your
lasts
voice.
a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity.
Possible bounce here.
And we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of
Push,
things.
baby.
But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Bitcoin trying to bounce here.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So
trying to go.
That was a strong, solid vote in favor of this cut. The strongly differing views were really about
what do we talk about?
The future,
manipulation, distribution, right?
And I think people are saying, they're noticing stronger economic activity. Forecasts generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches.
3 minutes.
There are differing views on the committee, and to the point where I said what I said.
B-shaped recovery and
balance sheet. If you
I'm long on Solana, looking for continuation
now,
back up, half the position
size. Does that mean you have to go back to actually
see if we can push
adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more
for continuation here.
Balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long.
Gap filled?
But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point.
Who knows? It could be the low, and then China news comes out tomorrow, right?
We didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding Treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions.
Another one.
But that's
400 realized. Let's go, Solana.
Janelle. Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake?
Bitcoin coming up to retest the lows. Same with Solana here. So this is where you typically.
So the September CPI report, we didn't get PPI after that, which is
Lasers
important
is on
for
fire
translation
today.
into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components.
Resistance level here.
Basically, you've seen goods prices increasing, and that's really due to tariffs, and that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's doing.
I'm gonna go and
been
take
doing
this
that
off
for some
here.
time, and
$200, another 200.
That leaves the biggest category is services other than housing services, and that's kind of been moving sideways over the last few months. But a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6
there we go.
And so
another one,
if
GG's.
it's 2.8, then
GG's in the chat.
Core PCE, not including tariffs, might be 2.3 or 2.4 in that range.
Good job, everybody.
So that's not so far
Still
from
here.
the goal.
300 people here, 130
so
likes.
We
Thank
look
you
at
guys.
that, and
Smacking up likes.
The thing about tariff inflation is
talking
the
smack.
base case
Making
is
money.
that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply
on days like this.
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation. Yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And, you know, overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and I mean, financial services.
NASDAQ bouncing, V-shaped recovery, baby.
Rather than actually paid is a big part of that. But also just, you know, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, you know, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restricted after all.
Back to where it
And
started.
could further
trade
rate
here.
cuts at this point perhaps
Still
fuel an
waiting,
excess
everybody.
level of investment?
Thank you for being here, supporting the channel, hanging out.
Market bubbles.
If you're new here, welcome.
How is the Fed thinking about that?
Come trade with us live in the morning. That's where it's at.
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are
right back to where we started, looking for
investing
push
a
through
lot
here.
of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive.
Bitcoin holding
it's based on
support
longer
here,
run,
trying to go. No
longer
trade.
run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but all of these. I'll just mention some of the many names. Price
rejection
stats,
here at the
Adobe
lows,
and others.
Good take profit level, everybody.
For wage inflation, there's ADP data.
Coming back
spending,
for late
You're
longs.
going to ask about spending at some point. There are lots of other things that we look at, but it's many.
SPY.
Many different sources, and again, including what we get out of the
Bitcoin,
the beige
trying to
book,
hold here,
which will be sort of come out mid-cycle as always, and it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that
this
up.
Guy's
I don't think we'll be able to have
rug
a very
and pump.
granular understanding.
Interesting
of the
day,
economy,
guys.
While this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious.
Trade the cough, guys.
To the
There's
degree
the
you
cough.
are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige
Another
book,
cough.
do you worry at some point you're going to have to start making policy
Got
by
a cold
anecdote?
today.
This is a temporary state of affairs, and we're going to do our jobs. We're going to
do our
collect
jobs.
every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do.
Rejection.
If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into
There's
things.
that cough, man. Watch that cough.
The data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing
Quick
to that.
test
I'm just
here.
saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, We saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it.
No enter.
Household
no trade
health
right now.
premiums
Just
that
waiting.
are going to possibly be going up quite substantially, things like that. Has
They're
that
come
started
back for
to
late
become a
longs right
factor
now,
in your
so
policy discussion?
So those are both things that we're watching very carefully. To start with the layoffs, you're right. You see
previous lows, rejection,
a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully.
NASDAQ rejection.
Yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet.
Above this.
Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really
trying
carefully.
To hold, wick test, trying to bounce.
But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
NASDAQ trying to get above here, still failing to do so. Still trying to push. No push though. Still waiting.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December
NASDAQ has to go here. It's not rejection.
What other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate. And that's,
still trying to bounce.
You can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee,
still weak.
It's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
He seems optimistic. So on that division, he seems a bit dovish.
Talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also
push here.
Different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues.
Still not pushing.
And so we're at a place now where we have in fact cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes, and I'm just telling you that's what happened.
No strength, no strength. Looking weak. Looking weak. Looking weak.
Thank you so much, Liz Scholze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve
Nasdaq's got to bounce.
Market?
No trade. So still waiting, guys.
I think there are two things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's two things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration, and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined.
Long-term trade.
So the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on. But it is mostly a supply function.
Got to push up to VWAP here.
It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely
still weak
overcounting in the way that
Nasdaq bouncing,
does its
trying
work,
to push,
is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't. If you're making zero jobs,
what are you guys
if it's
cooking?
in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help.
It's got to go, man.
So that at least the labor market doesn't
look for like
get
a sweep.
worse. So it's a complicated situation, and some people argue that this is supply, and we really can't affect it much with our tools.
No trade.
But
still waiting.
Others argue, as I do, that there is an effect from demand, and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation, because it takes a while for tariffs to work their way through the production chain.
Can the Nasdaq
and finally
go?
Get to consumers. And we see this now from the tariffs that were put in place now many months ago.
Come on, push
those
Bitcoin.
Effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring.
VWAP.
These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory. This is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level, and then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's
just
I think a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even and it's nice that that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio.
On Seoul.
Do you have any
Not
concerns
engulfing.
that equity markets are or are close to being overvalued at this point?
You know, we don't look at any one asset price and say, hey, that's wrong. You know, it's not our job to do that. We look at the overall
NASDAQ trying to go
financial
still.
system, and we ask whether it's stable, whether it could withstand shocks, right? So, you know, banks are well capitalized, while some households are clearly under stress. In the aggregate, you know, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking
No trade
system
here,
or
guys.
the
Just
financial
chilling.
system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. You know, we don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few
Bitcoin's
weeks.
pushing here.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think, you know, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not you know, about 25 basis points here or there. You know, we use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here to, by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it.
Nice.
Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, you know, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, you know, I've told you the story. It's a complicated story, but this is the best assessment that we can make. But you know, because there's uncertainty around inflation, the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, you know, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different in the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and you know so there's a clear bubble there. Whereas I won't go into particular names, but
see if we can push here. Buying strength again.
You know,
see if we can push.
It looks like they have business models and profits and that kind of thing. So it's really a different thing.
I like that candle, right? That strength through the resistance.
The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI. It's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been is much bigger than that, and has been growing and has defied a lot of negative forecasts, continuing to do so this year. Consumers are still spending. Now it may be mostly higher end consumers, or maybe skewed that way, but the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You can point to growth. I mean, actually, growth as opposed to level. But
he's into growing, guys. He's a grower and a shower.
And
Mr.
why do you
Chair
think
Powell.
the labor market is
Stopped
slowing
out.
so much?
$280. Another one.
Why is it slowed so much?
Nickel and diamond, the
Well, what's happened
FOMC, baby,
is
with
that the supply
AlexOCrypto.
of
GG's,
workers
everybody.
has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that, you know, where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend.
Anything else?
So I think you're seeing some softening. You know, the economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But you know, you still got the economy growing at a moderate pace.
Aerodrome looks yummy.
Andrew. Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, you know, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you know, you slow down when you can't see as far ahead. Others may argue, I mean, I'm not sure where this argument will come up, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, you know. So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, you know,
rolling over a little bit here. NASDAQ.
We're going to have to do our jobs.
Trying to push through still.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge.
I'd like to see this taken.
Has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since
rolling
then
over.
through various mechanisms.
Late longs again, man, getting punished.
You know, I look forward to
got to pay yourself here. That's the
I know those discussions are really just getting going. They haven't come to the point where they're
pay to play.
You know, where they're got a whole plan and that kind of thing. So
otherwise
I really
you
don't
get
have
slapped.
much to say on that.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, you know, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, I mean, no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is
coming down.
Really, any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you know, you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up
coming
over
down, double top, rotation down.
There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up.
Why is that all the way over there?
Job creation is very low, and the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long
double
recovery.
Bottom market
if you have
here.
a long period of very strong labor market conditions,
bullish divergence,
it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive.
On NASDAQ?
And we're not at that place
Trying
right
to bounce
now.
on Bitcoin?
So, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. I mean, inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them.
Pretty
we're
flat
in the middle
here
of
for
that
Bitcoin,
process,
guys.
And we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation.
He's got no data.
We have 4.3%.
I grew up with no data.
Employment. We have an economy.
Did you have a data? Because I had a data.
Close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank.
NASDAQ's still failing to push.
One of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this.
Come on, NASDAQ, push out, man.
It would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of
how are you gonna let some old geezer push you around like that, NASDAQ? You a boss, no?
Since April, and if we do wind up resuming rate cuts at some point, we will. At some point, I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under quite challenging circumstances.
Weak, man.
Doing the best we can.
So weak.
We'll go to Jennifer.
No volume. Nothing coming in, guys.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
Failure to push.
So, we're obviously we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit,
It's the ninth month.
automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. You know, we're looking at it carefully. We're paying close attention.
Good to see everybody here. Thank you for being here.
A broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But you know, we're going to be monitoring this quite carefully and making sure that that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, you know, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the in the stock market.
Still no trade,
people
guys.
At the lower end of income
just
and wealth
here,
have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. But you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
And he's out of here. Bye, Powell. See you tomorrow. Whenever you're fired. Is he gonna get fired? Well, there you have it, guys. FOMC, a dump, a pump, and we're right back to where we started. Is there any more trades? I think we let it bake. Okay. For all the Discord members, I'll have an updated chart for you guys. But right now, this is, we've pumped, we dumped. We're literally pretty much where we started again. So we've come back to reality, okay? So looking for a continuation here, possibly after that big liquidity sweep, okay? Bullish divergence in here, looking for a continuation. We'll see if we get it. Right now, no trade for me. Hopefully you guys have had a great FOMC live. Thank you guys for being here and supporting the channel. I do appreciate you guys. Not bad. Couple trades. I think I'm positive. I got to double check, but another day, another dollar. I'll see you guys in the morning. God bless you guys. Have a wonderful rest of your day. Bye.
On the come up, better sit low. The product base, better drip though. Pocket fat when the chips low. AlexOCrypto, fit the party like a disco. Fan base like my wallet, yo. Stay true to the digital. AlexOCrypto. 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 What you know about juice? Making them moves. Data flow casual, breaking the news. Revenue proof. A building portfolios taking well over exceptional pain. I'm trapping this game, so participation ain't a hard knock. I put in the work so you got knowledge. You ain't drawing with luck when you following us. The result is a pan full of fat pockets. Bada bang, that's an otter gang with an auto flame. With a lot of hate. Get above the lane, ain't about the trade. Have another trade, get another play. They playing God so pretentious. Grapes in these waters forbidden. Well indeed, that's a felony. Don't look at me, but it's TRB. Have you heard of TRB? I don't know. On the come up, better sit low. The product base, better drip though. Pocket fat when the chips low. AlexOCrypto, fit the party like a disco. Fan base like